Okay, so for everyone out there who's really into the demand and supply zone stuff on YouTube,
Right.
and I mean, anyone who's trying to figure out what's really moving these markets,
Yeah.
we're going to really zero in on gold GC1 futures today.
Absolutely.
We've seen gold make some seriously big moves lately.
Huge. Yeah.
And we're going to like break it all down, figure out what's going on.
Exactly. Gold's been just wild lately, up to these record highs.
Yeah.
Then it pulls back.
Yeah.
It's a really interesting puzzle
Right.
to try and figure out, what the market's doing right now.
So the way we're going to do this deep dive today is with this like super in-depth trading analysis and forecast report.
Love it.
It's got like all the technical stuff you could want, the fundamental drivers, and even a feel for how the market's feeling, sentiment.
Right. Sentiment's key.
So we're going to try to sift through all that and find the stuff that really matters for where gold might be going next.
Right.
Especially for the demand and supply folks out there.
So how do we break this down then?
Yeah. So first off, where's gold trading right now?
Yeah, let's set the scene.
And what kind of craziness are we seeing in terms of, how much it's moving around?
Right, volatility.
Exactly.
Yeah.
So the report says, and this is, around the week of like April 7th to 11th, 2025.
Okay.
Gold GC1 was sitting at $3,056.01.
Right. But the thing that jumps out at you is that it's down
Oh, yeah.
2.10%.
Wow.
That's $65.6 from the day before.
That's a big move in one day.
Yeah, that's a huge move for gold
Yeah, it is.
in a single day.
Absolutely.
So, that really shows you just how volatile things are right now.
Right. And we've got to remember the big picture, too.
Right.
So the report reminds us that gold has more than doubled.
Yeah.
Since like way back in 2020 when it was around $1,400 and then it just took off.
Yeah.
Peaking recently, above 3,160.
Right.
Specifically 3,168.6 is the number they mentioned.
Right.
So when you get that kind of climb.
It often, leads to these corrections.
Oh, yeah.
The market's got to find a balance again.
So true.
And
that's what we've been seeing.
Right.
The report says there's been a 2.53% drop over the week.
Okay.
And a 1.41% drop just today.
So for anyone who's thinking about demand and supply,
Right.
this kind of like sudden drop,
Yeah.
it's like a flood of supply,
Right.
just kind of overwhelming the demand at the higher prices.
And that really brings us to like the big question.
Yeah, what's the deal?
All right, what's the story behind this big move?
Yeah, is it just people cashing out after, that huge run up?
Right.
Or something bigger going on
Yeah.
with, the whole supply and demand for gold?
Let's dive into the technicals first.
All right, let's get technical.
So the report's talking about this weekly candle
Yeah.
showing a bearish engulfing pattern.
Okay.
Now, for someone like, our YouTube viewers who are
Sure.
really into supply zones, when you see this pattern forming,
Right.
especially after a big uptrend like we've had,
Exactly.
and maybe it's at like a previous high point or
Yeah.
somewhere you think supply might be strong,
It is your zone.
that could be a really strong signal.
It could be a big red flag.
Yeah, that maybe buyers are getting rejected there.
Right. It's like saying, nope, not going any higher.
What do you think about that?
So this bearish engulfing pattern,
Yeah.
it's basically where the sellers take over
Yeah.
and they just dominate the whole week.
Yeah.
It often means that all that upward momentum
Right.
is just stalled out.
Right.
And there's more people selling than buying at those prices.
Yeah.
And then to make it even stronger,
Yeah.
the daily chart's also showing a bearish reversal.
Oh, wow.
So it's like double confirmation
Yeah.
that things might be turning around.
And they even talk about this parabolic move
Oh, yeah.
from like 2023 to 2025.
Parabolic, that's a crazy word.
Yeah, it means it went up really fast.
Yeah, like straight up.
And when that happens, sometimes the buyers just get exhausted.
They get tired.
Yeah, and then you get these drops.
They're spent.
Yeah, because there's no one left to buy.
Nobody left to buy.
Yeah.
The demand just disappears.
So the report gives us all these really important support and resistance levels.
All right, levels. I love levels.
Yeah. So for resistance,
Yeah.
the points they give us are
Okay.
3,121.7, which was the close the other day.
Okay, previous close.
Yeah. And then 3,160.2,
Okay.
which was the high point for the day recently.
That's high.
And then 3,168.6,
Okay.
which is the highest it's been in the last 52 weeks.
The 52-week high.
Right.
All right, so those are the resistance levels.
Yeah.
And if someone's trading, based on demand and supply,
Yeah.
those levels are probably going to line up
Yeah.
with areas where there's been a lot of selling.
Historically, right?
Right, in the past.
Yeah, like where sellers have stepped in before.
Like that's where they like to hang out.
Yeah.
So am I right about that?
Yeah, you're totally right.
Okay, good.
So those resistance levels, they often show you where these supply zones were before,
Right, the supply zones.
where sellers were like really active.
Good.
So if the price goes back to those levels,
yeah,
we might see their sellers come back out again.
they might come back out to play.
Right, because they're like, oh, this is where I sold before.
This is my spot.
I'm going to sell again.
Exactly.
And then on the flip side, we've got support levels.
Yeah. Flip it around. Let's talk support.
Yeah, so these are the levels where buyers might jump in.
Yeah, they're like waiting in the wings.
Right.
Ready to pounce.
So the support levels they mention are
Okay, give them to me.
3,032.7.
Okay, recent low.
Which was the low point for the day recently.
Right.
And then 2,994.8.
Okay.
Which is the 100 SMA on the 4-hour chart.
Yeah, that's the 4-hour 100 SMA.
Right.
Okay.
So for someone looking at demand,
right.
that 4-hour 100 SMA,
Yeah.
it might show you where there's been demand over like the medium term.
Intermediate term demand.
Yeah, if it breaks below that.
Uh-oh.
Yeah, it could mean demand's getting weaker.
Not good.
And then there's 2,938.6.
Okay.
Which is the 50-day SMA.
50, I got it.
And finally, 2,820.7.
Okay.
Which is a major structural support level.
Major structural. Okay. That one sounds serious.
Yeah, that's like a big one.
The big one.
Yeah, so all those support levels, those are areas where we might see buyers step in.
Buyers are going to hold the line.
Yeah.
They're going to say, this is where we buy.
Yeah.
Right.
Exactly.
So we've got our resistance and our support.
Yeah. What else is in this report?
So they also point out some pretty interesting chart patterns.
Oh, really? Like what?
Well, there's this potential double top.
Okay, double top?
Yeah.
Where's that?
It's on the 4-hour chart.
Okay.
And it's around 3,180 to 3,109.
Okay, so look right up at the top there.
Yeah, right near those highs.
Right.
And then it breaks down from there.
Yeah. Okay.
So for someone who's trading demand and supply,
right.
when the price can't break through that area,
right.
like 3,180 to 3,190.
Yeah.
That's probably a supply zone, right?
Probably.
And then it drops down.
Right.
It just shows you how strong the sellers are up there.
Right. So it's like they tried to push it higher.
Yeah.
And the sellers were like,
Nope, not today.
Exactly.
So they couldn't get through that supply zone.
Yeah.
And then it just broke down.
Yeah.
A big win for the seller.
Total win for the sellers.
And then there's also this bearish flag.
Okay, a flag.
Yeah.
Where's that?
It's on the 1-hour chart.
Okay, so very short term.
Very short term.
Yeah.
And it also broke down.
So even more confirmation.
Even more confirmation
Yeah.
that right now,
yeah,
in the short term, supply is in control.
Sellers are winning.
Sellers are winning.
Right.
But wait, there's more.
Oh, no. What else?
There's a potential head and shoulders pattern forming.
Okay, head and shoulders. Now that's a classic.
Yeah, it's a classic.
Yeah.
And this one's on the daily chart.
Okay.
And the neckline is around 3,000.
All right. 3,000.
Now, this is an interesting one.
Okay.
Because if it breaks below that neckline,
yeah,
it could be a big shift.
It's a big shift.
Yeah, in the whole balance of supply and demand.
Wow.
On the daily chart.
Okay.
And that could mean,
yeah,
it could drop even further.
Oh, wow.
Down to those support zones we were talking about.
Okay, so that head and shoulders is something to really watch.
Definitely keep an eye on that one.
All right, so the report also talks about these simple moving averages or SMAs.
Yeah, SMAs.
And it says the major ones,
yeah,
like the 50-day, which is at 2,938.6.
Okay, 50-day.
Yeah, and the 200-day, which is at 2,667.9.
Okay, 200-day.
They're still showing a bullish trend overall.
All right, so long-term still looking up.
Yeah, because the price is still above them.
Right, price is above.
Right, so that suggests the long-term demand,
yeah,
it's still there.
Still hanging in there.
But then you look at the hourly chart.
Okay, what's happening on the hourly?
And the price is below the 20, 50, and 100 SMAs.
Right.
Yeah, so that's showing you that short-term surge of supply that we've been talking about.
It's like this battle between the long-term demand and this like burst of supply.
Right now.
Right now, exactly.
So it's kind of like a tug of war.
A real tug of war.
Yeah.
Who's going to win?
And then there's this uptrend channel.
Yeah.
On the weekly chart.
Oh, okay, weekly chart.
Which is also saying the long-term trend is still up.
Okay, so we've got multiple signs.
Right.
That long-term things are still looking good.
Yeah.
But it seems like things are losing steam a little bit.
Yeah, like not quite as strong as they were.
Yeah, the momentum's weakening.
Right, and that means that all those short-term bearish signals.
Oh, yeah, those bearish signals.
Yeah.
You got to pay attention to those.
Yeah, those are the ones to watch right now.
In the immediate future.
Yeah.
Okay, so let's talk about volume.
All right, volume.
Let's do it.
This is where it gets really interesting.
I love volume.
So the report says that trading volume has been way higher than usual.
Oh, really?
Yeah, during this recent drop. Like, it says 309,150 contracts were traded.
Whoa.
Compared to an average of just 6,615.
That's huge.
That's a massive difference.
Massive.
So for anyone who's into analyzing demand and supply,
yeah,
that huge increase in volume on a down move.
Oh, yeah.
It's like a giant sign.
It's screaming at you.
Yeah, that there's a ton of supply hitting the market.
Right. Supply is flooding in.
Yeah, and it's like drowning out the demand.
Overwhelming the buyers.
Right, at those prices.
Exactly.
And then there are these spikes in volume.
Yeah.
On the 1 hour chart.
1 hour?
Yeah, during those big sell-offs.
Okay.
Which can be a sign of what they call capitulation.
Capitulation? What's that?
It's basically when people who bought in late.
Oh, they bought at the top.
Yeah, they bought when it was high.
Okay.
They start panicking and selling.
Oh, they're getting out.
Yeah, they're like, I got to get out of here.
Cut my losses.
Yeah.
So they're just adding even more to the supply.
Right.
Pushing the price down even further.
Exactly.
Right.
So the report gives us some potential entry and exit points.
Okay. Levels, give me levels.
Based on all this technical stuff.
Right.
So they say a bullish entry would be around $3,020 to $3,030.
Okay. Bullish. So that's for the buyers?
Yeah, for people who think it's going to go up.
Right.
And the zone's right around the recent low.
Okay, recent low.
So it might be a spot where short-term demand comes back in.
Yeah, they're like, okay, this is a good deal.
Yeah, I'm going to buy here.
Yeah.
So what do you think about that level?
It's like a combination of a recent low.
Right.
And then there's probably some like psychological support around 3,000.
Oh, yeah. 3,000's a big number.
Yeah, people see that and they're like, whoa, it's getting cheap.
Yeah, it might be time to buy.
Might be time to buy, exactly.
And then on the other side, there's a bearish entry point.
Okay, bearish. So that's for the sellers.
Yeah, if you think it's going to go down,
okay,
that's around $3,120 to $3,130, which is right in that cluster of resistance.
Okay, resistance.
Yeah, so that might be a zone where selling picks up again.
Yeah, if it bounces back up there,
right,
they're waiting.
Yeah, the sellers are like, here we go again.
Time to sell.
Exactly.
All right, so entry points, we got those?
Yeah.
What about risk management?
Right, so they suggest stop-loss levels.
Stop losses, love them.
Yeah, so for bullish positions,
okay,
you'd put your stop-loss below $2,990.
Below $2,990.
Okay, yeah, and for bearish positions,
yeah,
you'd put it above $3,170.
Above $3,170.
Got it. So those levels are like strategically placed beyond those key technical points.
Yeah.
So if the price goes past those levels, yeah, it means your initial idea about demand or supply was probably wrong.
It's like, okay, time to get out.
Yeah, time to cut your losses.
Exactly. Protect your capital.
So those stop losses, they're like your safety net.
Yeah, your safety net.
In case the market does something you don't expect.
You never know. The market's going to do what it's going to do.
So thinking about our demand and supply zone people on YouTube, how can they use all this technical stuff?
Okay, so they can take these support and resistance levels and use those to figure out where the big imbalances between demand and supply might happen.
Right, where the action is going to be.
Exactly where the fireworks are.
Yeah, and those chart patterns.
Yeah.
Those give them like visual clues.
Visual clues, I love it.
Yeah, about, you know, how the balance is shifting.
Like which way is the wind blowing?
Right, and then the volume.
Yeah, volume.
That helps them confirm how strong the move is.
Right.
Like if it breaks out or breaks down from one of those zones.
Is it a real move or is it just noise?
Right. Is it real or fake?
Exactly.
So it gives them more confidence in their trades.
More confidence. That's what we want.
Right. Yeah.
All right, so let's switch gears.
Okay, switching gears.
Let's talk fundamentals.
Fundamentals. Let's get fundamentals. So the report reminds us about that big 2.10% drop.
Yeah, ouch.
Yeah. But it also says gold is still up for the year.
Okay, still up for the year.
Yeah, and it's being supported by that 50-day moving average.
All right, so the 50-day is holding strong.
Yeah, so what does that tell us?
It means that even though there's been more supply lately, over the long term, those fundamental things that are driving demand, they might still be there.
They're still in play.
They're still in play.
Yeah.
Interesting.
And it says market sentiment has shifted.
Oh, sentiment shifting. I love this stuff.
Yeah, it's gone from like super bullish.
Everyone was like, gold's going to the moon.
Yeah.
Right.
To kind of cautiously neutral.
Okay, so they're a little more hesitant now.
Yeah, they're like, I don't know.
I'm not so sure anymore.
But there's this interesting thing they mention about Reddit.
Reddit? Oh, yeah, I love Reddit.
Yeah, so some people on Reddit, they still think this dip is a good time to buy.
They're like, buy the dip.
Yeah, they're like, this is a sale.
Gold's on sale.
Yeah, so even though some people are less bullish,
right,
there's still a bunch of people who believe in gold over the long term.
Long-term believers.
Yeah, and that could create some demand zones in the future.
Right, because they're going to step in and buy.
Exactly.
And that could put a floor under the price.
So that Reddit sentiment, that's a really interesting piece of the puzzle.
It is. It's like a little window into what people are thinking.
Yeah, it shows you that even after a big drop, there's still some belief out there.
Yeah, some faith in gold.
Right.
Which could really affect how those demand zones form.
And how strong they are.
Exactly.
Okay, so the report talks about these escalating trade tensions.
Oh, yeah, trade tensions. Everyone loves those.
It's all over the news.
It's everywhere.
Yeah, so they mention things like tariffs on cars.
Okay, tariffs.
Yeah, and Europe fighting back.
Right.
And China might do something too.
Oh, this is getting serious.
Yeah, so how do these geopolitical things usually affect the demand for gold?
So when things are uncertain in the world, people get nervous.
Yeah, they freak out.
They freak out a little bit.
Right.
And they start looking for safe places to put their money.
Like gold.
Exactly. Gold is like the classic safe haven.
Yeah.
So when trade tensions rise, it makes the whole economy feel shaky.
Yeah.
People don't want to take as many risks.
Right.
So they might sell their stocks and buy gold instead.
Right.
Because they think it's going to hold its value better.
Yeah, it's like a safe bet.
The safe bet.
Yeah.
So all that extra demand, it can really affect how those demand zones form.
And how long they last.
Exactly.
So what about upcoming economic reports?
Economic reports. Oh, yeah, the data.
Yeah, like inflation numbers and what the central banks are saying.
Yeah, the Fed, all that stuff.
Yeah, how does all that tie into the whole demand and supply thing for gold?
Okay, so inflation, it's like a monster that eats away at your money.
Yeah, it makes everything more expensive.
Exactly. Your dollars buy less stuff.
Right.
But gold.
Yeah.
Gold's like this limited thing.
Yeah. There's only so much of it.
We're not making any more of it.
Right.
So when inflation's high, people start thinking, maybe I should put some money in gold.
Yeah, to protect their wealth.
Exactly, because it might hold its value better than dollars.
Right.
And then there's the central banks.
Right.
Those guys control interest rates.
Yeah.
And when interest rates go up, it makes holding gold a little less appealing.
Oh, really? Why?
Because gold doesn't pay you any interest.
Right. It just sits there.
It just sits there.
Yeah.
So if you could get a decent return in a savings account, why would you hold gold?
Right.
So those reports about inflation and what the central bank's going to do, they can have a huge impact on how attractive gold looks.
Yeah.
And that, of course, affects demand.
Right.
So we got to pay attention to that stuff.
Okay. So the report also mentions physical demand.
Physical demand. Okay, so that's like people actually buying gold bars and coins.
Right, or jewelry.
Jewelry, yeah. Especially in places like India and China.
Yeah, they love their gold jewelry.
They do. It's a big part of their culture.
Yeah.
And the report says that this physical demand, it might actually go up when the price drops.
Oh, really? Why?
Yeah, it's like a sale.
They're like, oh, gold's cheaper now.
Let's stock up.
Let's buy some more.
Exactly.
So that physical demand could create a floor under the price.
Yeah, it's like a safety net.
Right, maybe around $3,000 to $3,050.
Okay, so those levels might be really important.
Yeah, because that's where the buyers might step in.
And say, nope, not going any lower.
Exactly.
So that physical demand, that's a big fundamental factor.
Yeah, we got to keep that in mind.
Definitely.
Okay, so there's this other thing the report mentions.
Yeah, what's that?
It's about how gold's connected to other markets.
Oh, correlations, yeah.
Yeah, so they talk about this sentiment on Reddit.
Reddit again.
Yeah.
What are they saying this time?
So some people are saying there's resistance to short positions.
Okay, resistance to shorts. What does that mean?
It means people are reluctant to bet against gold.
Oh, they don't think it's going to go down much further.
Yeah, they're not convinced it's going to keep falling.
Okay.
And some people think there might be a bounce coming soon.
A bounce, okay, so a move back up.
Yeah, they're like, this drop was just a little correction.
It's a measured drop.
Yeah, like a measured drop.
I like that measured drop.
Yeah, so what does that tell us about demand?
It means there might still be enough demand out there to push the price back up.
To fight back against the sellers.
Exactly.
So how does all this technical and fundamental analysis, how does it all fit together?
Okay, so here's the situation.
Yeah.
in the short term,
yeah,
the technicals are saying there's a lot of supply coming in.
Right. The sellers are in control.
Yeah.
But there are these fundamental things like those geopolitical tensions.
Guys, the world's a mess.
And the potential for physical demand.
Yeah, people buying jewelry in bars.
That could provide some support.
Yeah, they could hold the line.
So it's really going to come down to how these forces interact.
Yeah. It's a battle.
At those key levels.
At those key levels.
Of potential demand and supply.
Exactly.
So it's like a tug of war.
A tug of war for gold.
Yeah.
Who's going to win?
Okay, so let's move on to sentiment analysis.
All right, sentiment. Let's see how people are feeling.
Yeah, the report says that retail sentiment is mixed.
Mixed. Okay, so some people are bullish, some are bearish.
Yeah, it's all over the place.
Makes sense after a move like this.
And they mention Reddit again.
Reddit's always got opinions.
Yeah, so some people on Reddit, they think this weakness is just temporary.
Okay, so they're still bullish.
Yeah.
They're like, it's just a blip.
Yeah, gold's going to go back up.
Don't worry.
And some people are saying that big institutions are buying.
Oh, institutions. That's interesting.
Yeah, like the big money.
Yeah, they're the ones to watch.
And then there are others who don't think, the short sellers.
Yeah, the people betting against gold.
Yeah, they don't think they have enough power to really push it down much further.
They're like, the shorts are going to get squeezed.
Yeah, so all of this mixed sentiment, it can make things even more volatile.
Oh, yeah.
Because you've got these different groups kind of fighting it out.
Bulls versus bears.
Yeah, who's going to win?
It's a battle.
And the report talks about these contrarian indicators.
Okay, that's like thinking opposite of everyone else.
Yeah, like going against the crowd.
Yeah.
So one example is that high volume during the decline.
Oh, yeah. We talked about that.
Yeah, it could mean that a lot of the sellers are already gone.
They've already sold.
Yeah.
And that might mean a bounce is coming.
Oh, interesting.
Yeah, it's they've all gotten out of their positions.
Yeah.
And now there's room for the buyers to come back in.
So the selling pressure is gone.
It's relieved.
And then the fact that the correction happens so fast.
Yeah, it was a quick one.
It could mean the market over.